Ladies and gentlemen, it is happening. We are witnessing some new major economic headwinds that are happening right now. We have inflation surging, the unemployment rate is ticking up, we are seeing more bank failures, and we are seeing stocks crash 99% in just a matter of minutes. So what really caused this massive crash? What really is happening with the economy? And we got more alarming data what's happening with the US government deficit, which will lead to the demise of the US dollar. So everyone, this is going to be a very, very important action-packed episode full of information and data of everything that's happened over the past week and what's going to happen the following week. So you're not going to want to miss this. So you know what time it is. Let's get straight into the news, the facts, and the data. Okay, first things first, everyone. We have a huge pivotal week in the markets right now. We're going to get inflation reading, and we're also going to be getting the Fed meeting minutes. Okay, so it's going to be a massive, massive week. And I find this quite hilarious. We're getting this conflicting data. Apparently, US jobs gains have surged, but the unemployment rate went up. So that's right, the unemployment rate went past 4% for the first time in over 2 years. And once it goes up over 4%, that's normally a sign that things are not looking good. So what exactly is going to happen? Well, the next update on inflation is expected on Wednesday morning with the release of May Consumer Price Index, that's the CPI. Now, Wall Street expects an annual gain of 3.4% for the headline CPI, which includes the price of food and energy. Prices are set to rise 0.1% on a month-over-month basis, down from 0.3%. Now, the thing is, if it comes in hotter than expected, we will see a lot of turmoil in the markets because a lot of people were hoping that the Federal Reserve would be cutting now. We're, almost heading into July, but they are not. And another hot inflation report will mean there won't be any cuts in 2024. So prior to Friday jobs report, the market was pricing in 2 rate cuts this year after the release. That number teetered between 1 and 2 per Bloomberg data. And the markets keep getting it wrong. They're all saying they're going to cut at the start of the year. Then they're saying they're going to cut in June. But no, they cannot cover up how bad this inflation crisis is, this cost of living crisis. And I think they're going to keep lowering the amount of rate cuts. And there may even be, like I said before, no rate cuts in 2024. Now, also after this news, the bond market tanked and the 10-year US Treasury yield actually spiked to 4.43%. Now, just some breaking news as well. We're seeing huge shifts happen across Europe. We're seeing a right-wing tsunami in the political polls. A lot of people are not happy with the left-wing politicians, with a mass immigration, with cost of living crisis, with inflation, with focusing on politically correct agendas rather than solving the major issues of housing crisis, cost of living crisis, etc., etc. So the euro fell after the election results, and there's going to be a snap election most likely in France. Now, I know what you're probably thinking, oh, it's a clickbait. No, stocks crashed 99%. Well, there was actually a glitch that happened this week where Berkshire Hathaway actually crashed 99% in just a matter of minutes. So let's look at this. So the New York City Stock Exchange says technical issue that caused Berkshire Hathaway to be displayed down 99% was fixed, of course, on Monday. It's unclear exactly how many stocks were affected by the technical issue. There were less than 4,000 recorded trades on the day for Berkshire's A-class shares when the trading was halted. Now, trading continued in the B-class shares, which were down less than 1% on Monday morning. And the New York Stock Exchange said roughly at 11:45 a.m. That the issue had been resolved and trading was back to normal. Now, I foresee one day there's going to be a Black Monday event like this where maybe with all this AI advancement, with the rapid technology advancement, with the geopolitical events that are happening right now, imagine if the New York Stock Exchange was hacked, if it did come under attack, and we could see a financial market meltdown like what we saw in Black Monday in 1987, like what we saw with this glitch, where people could lose their wealth overnight, and it will happen in minutes and nobody be prepared. So everyone, don't keep all your money on the stock exchange. Just like I say, don't keep all your money in the bank account. Don't put all your retirement on the stock exchange, because we don't know in future if there could be glitches like this happen again. Now, also some more alarming news. We're seeing the used car market take a huge turn, and this is a sign the economy is not doing good. Wholesale used car prices declined in May. They're down 12% year over year. And I'm seeing this at a lot more car dealers lately. A lot of used cars are being sold. A lot of relatively new cars, for example, 2 years old, are being sold from the people that got their stimulus checks during COVID. They spent like crazy. But now with the cost of living crisis and with unemployment going up, people are forced to sell those new fancy cars they brought, which they shouldn't have. They probably got debt. And we're seeing a lot of used cars flood the market. So this is not a good sign for the economy. Now, I want to show you a few very, very alarming charts, and I'll go ahead and move myself so you can see these charts on how bad the situation is that we are in, unlike the mainstream media is saying. So government interest expenses have crossed $1 trillion for the first time. That's just in interest, okay? Imagine the amount the government could do with that $1 trillion, except it's just going to pay the interest on the debt. And so what are they going to do? Well, they're going to issue more bonds, which is debt. And the private treasury is expected to increase to 1.9 trillion in 2024. And this has now far exceeded the levels we saw in the financial crisis. And remember how they keep saying the consumer is so strong, people are spending like crazy? Well, credit card defaults are now at record levels and the highest since 1991. Again, if you think the economy is great, and the reason why there's been this big economic boom is because of debt. And we've just hit a stalemate. Now federal debt has passed the US GDP. So we're in more debt than we're actually producing. And unfortunately, this cannot keep on going on forever. Eventually, you hit your limit. Eventually, you max out those credit cards and you have to have a pullback. It will be painful. It will be sharp. It will be swift, but it has to happen. Because look at this next chart here, everyone. US federal deficit adjusted for inflation. This is World War I. This is World War II. This is 30 years of deficit spending. And look what's happening now. They are printing the US dollar like never before. They're printing it into the ground, just like the great Roman Empire did. And it's diluting, it's destroying purchasing power. And this is why the cost of living crisis is getting worse. And other countries know this. Look at this chart. This is net purchases of gold in 2022 and 2023 by central banks. Other central banks around the world know what is going to happen to the US dollar. They know what's happening to fiat currencies. This is the last few years before we see all fiat currencies fail, and they are going heavy into gold, and you should too. So everyone, unlike the mainstream media saying everything is not fine, you're definitely going to want to protect yourself and prepare right now. So everyone, that's the end of the news segment of today's video. And now I want to talk about today's video sponsor, DeFi Technologies Inc. That's stock ticker symbol DEFTF. So we're going to dive into the fascinating topic that's been buzzing around the financial world, and that's digital assets and how they're transforming the financial system. Specifically, we're going to talk about DeFi technologies and why it's creating such a stir. So stick around, because by the end of this video, you'll have a much better understanding of the opportunities in the digital asset space. So first, let's talk about the basics. Digital assets, including cryptocurrencies like Bitcoin, Ethereum, and Solana, are reshaping the way we think about finance. They're decentralized, meaning they operate without a central authority like a bank or a central bank. This decentralization opens up new possibilities for how we handle money and investments. But for many traditional investors, diving into this world can seem daunting. This is where DeFi Technologies comes in. So DeFi Technologies, again, that stock ticker symbol DEFTF, is a financial technology company that's making it easier for traditional investors to get involved with digital assets. Imagine being able to invest in a diversified portfolio of these assets without needing a separate brokerage or bank account. That sounds convenient, right? Well, that's exactly what DeFi technology offers. They provide exposure to a wide range of digital assets through regulated equity instruments. This means you can invest in growth of cryptocurrencies like Bitcoin and Ethereum, along with other Web3 protocols, in a secure and regulated way. Now, one of the biggest hurdles for many investors is trust and security. Well, DeFi Technologies is public traded, which adds a layer of transparency and trust. You can invest through your regulated brokerage account just like you would with any other stock. This familiarity is a big plus for those who are cautious about stepping into the world of digital assets. So now let's talk about revenue. DeFi Technology has an aggressive revenue model with multiple income streams. They earn from trading and management fees, staking and lending earnings, and strategic partnerships with the digital asset and DeFi sector. This diversified approach helps maximize revenue generation, making it a robust business model. In fact, their assets under management stood at $908 million as of March 31st, 2024, a 78.7% increase from December 2021. Their 2023 assets under management was $508 million, showing their impressive growth trajectory. Another key point is a diversified asset exposure. While Bitcoin is most well known, it only accounts for about 51% of digital assets in the market. DeFi Technologies offers broader exposure beyond just Bitcoin. This includes significant opportunities in decentralized finance and Web3 sectors, areas that are typically hard to access through public markets. The comprehensive approach allows investors to tap into the extensive $2.4 trillion sector. Now, growth sectors that DeFi Technology focuses on are incredibly exciting. They provide direct exposure to the fast-growing sectors of exchange-traded products, ETPs, and cryptocurrencies. By leveraging innovative financial instruments and market trends of DeFi and Web3 technologies, they position themselves at the forefront of this digital revolution. And with the company looking to uplist to major US securities exchange like the Nasdaq soon, the visibility and accessibility of investing in DeFi technologies could increase. Now let's talk about the team behind DeFi Technologies. The company is led by experts with deep experience in financial markets, digital assets, and capital markets technology. For instance, the CEO of DeFi Technologies is also the co-founder of Hive, the first publicly traded Bitcoin and Ethereum miner in the world. The founder of Vala, a key subsidiary of DeFi Technologies, is Johan Waterstrom, with leaders who have founded successful ventures in blockchain and finance. The company is in incredible hands. Their expertise and strategic visions are driving the company forward in this rapidly evolving space. The company's main focus is on Vala and a new business line, DeFi Alpha. Vala, often considered the crown jewel of DeFi Technologies, has built an equity product for crypto that makes it easy to issue new exchange-traded projects once you have the license. They yield 7% in trading fees and staking on their assets under management, and with $1 billion under management, that translates to significant revenue. Vala is highly profitable and projected to make $87.45 million in revenue. Furthermore, DeFi Technologies is not just riding the wave of digital assets, they're helping to shape it. By offering trusted regulated exposure to a diversified portfolio of digital assets, making it easier for traditional investors to participate in this exciting market. Whether you're new to digital assets or looking to diversify your investments, DeFi Technologies offers a compelling opportunity. Let's not forget about their impressive market performance. The company's stock has doubled in the past month and is up a staggering 1,800% in the last year. With a market cap of $230 million and shares outstanding at $290 million, this growth is phenomenal. And with Anthony Pompliano, a well-known figure in the crypto space, as a shareholder, and endorsements from industry experts like Eric Jackson of EMJ Capital, it's clear that DeFi Technologies is on the radar of many major players. Now get this, the company is so profitable that it has announced a stock buyback, meaning they're buying back their own shares, effectively reducing the number of shares available in the market. This could potentially increase the value of the remaining shares, a move that benefits existing shareholders. So to wrap things up, DeFi Technologies, again that stock ticker symbol DEFTF, is not just another company in the digital asset space, it's a powerhouse with its aggressive growth, diversified revenue streams, and strong leadership. It's well positioned for continued success, and for retail investors, this is an opportunity to get in before Wall Street fully catches on. But again, everyone, always do your own research, do your own due diligence to figure out if this is right for you. But everyone, what do you think about all of this? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.